The Nigerian Deposit Insurance Corporation, or NDIC, recently jacked up the amount payable to bank customers in the case of a collapse of a financial institution. The revised deposit coverage now runs from hundreds of thousands to millions of naira across commercial banks, microfinance banks, mortgage banks, as well as mobile money operators. Joining me to discuss this latest development further is a market professional and group CEO at Cowry Assets Management, Johnson Chukwu. A very good evening to you and thanks for connecting in.
Good evening, thank you for having me.
You're welcome. Now, what do you think is the main factor or the main factors for the big jump in banks' deposit insurance cover by NDIC?
I think factors they would have taken into consideration is a change in the value of naira, or the change in the value of money. And when you talk of changing the value of money, you're talking of two major variables. You're talking of inflation rate, the impact of inflation that inflation has had in the value of money since the last review was in 2016, as well as the exchange rate. If you look back at 2016, the exchange rate was about 197 naira to dollar at the official window. Today, the official window is more than 1,500. So if you look at that and consider the fact that cumulative impact of inflation on the value of naira, then that's one of the major considerations they looked at. And that consideration is the distribution of deposits in terms of what is the value per unit of deposit that each banking customer has. If you look back at 2016, you will realize that people who had monies above 500,000 were very few. Unlike now, when those who deposits are above around 5 million and below, from the report they said about 98.98% of customers, of deposit customers, have balances around 5 million and below. So, but that has been a major shift between 2016 and now. And I think those are the major things. Because they change in the value of the money, because if you pay somebody 500,000 naira today, it doesn't have the same value as 500,000 naira had in 2016. You have to bear that in mind. And you can no longer buy the same value. The person standard of living is going to be worse off if he has to pay 500,000 naira today compared to if he had paid 500,000 naira in 2016. And those are the factors they had to look at.
Okay, but do you think the new and higher deposit insurance payable are, big enough for this change?
Yes, I think it is. Because if you look at the report, the comments made by the managing director of NDIC, he did say that in terms of deposit coverage, depositors coverage for the deposit money banks, that it was 98.98%. And that for the microfinance bank, about 99.27%. So that means that the cover of 5 million per depositor, enough to cover 99.27% of those customers that have account with microfinance banks. And for those that have account with deposit money banks, it covers 98.98% of the entire depositors. So if you cover, so what is only left is what it also means that there are only 1.02 Nigerian banking customers whose the ticket value of their deposit is above 5 million. I don't know what I'm saying. So in effect, you're going to cover, by the time you end up covering about 98.98% of a population, and this time around deposit customers of banks, then you partially met almost every need.
That's quite interesting. What now happens when the bank's recapitalization is concluded? Will there be need to further raise the deposit coverage amount for bank customers?
I think we need to get something right. The increase in the bank capital base does not necessarily you and I will have more money with the banks. It doesn't necessarily increase the value of deposits that each depositor will have with the bank. It doesn't necessarily increase your savings. It only has impact in the ability of the banks to lend, ability of the bank to provide some level of absorption, shock absorber in case of bad loans or in case of some difficulties, in case of losses by the banks. It doesn't translate that an average depositor in the bank will have a larger ticket in the amount of savings he has or the amount of money he has to place with the bank. That will only come when it increase. And hopefully, as economic activities improve and the GDP begin to grow, maybe the wealth of citizens will increase. An increase in the bank's authorized capital or shareholders' funds does not necessarily lead to an increase in the citizens' disposable income, savings or surplus that they have to keep with the banks. So there are two different things. Increase in the capitalization of the banks would not necessarily translate an increase in the deposit values that customers have to keep with the bank. But ultimately, if that leads to a growth in the economy over time, we may see the wealth of individuals, because what we're looking at, what the NDIC is ensuring is the deposit liabilities of the banks, and they're ensuring depositors of the banks to say, look, in case of a failure of a bank, we will indemnify you to a maximum limit of 5 million naira per day. So that's what we're talking about, and not necessarily has to do with how much share capital the banks are holding. The share capital the banks are holding will rather reduce the risk of default, because if a bank holds a higher level of share capital, then it's like the likelihood that the bank will default or the bank will fail is reduced.
All right, so you are assuring customers that whatever amount they have deposited already in the bank, in case of a failed bank, is safe and that they'll get their money back, right? So, but do you think that banks would have to pay higher deposit insurance charges to NDIC moving forward on the latest development and the recapitalization in the sector?
Georgina, that's actually one of the most interesting things about this increase in the deposit cover that the NDIC has effected, because it didn't come with a requirement that the banks have to also increase the premium they pay to NDIC. What it means, and as other government agencies will take a cue from this, you don't necessarily need to tax the corporate Nigeria or households, impose more tax on them to provide additional service or additional cover for them. What the NDIC has done is that they have invested whatever, or they're investing whatever funds that they get insurance premium, and they created some sinking fund. And what they've done, the evaluation, and come to realize that, look, the likelihood that we will need additional money other than what we have is minimal. And we believe that with the 98.98% coverage of the entire depositors of banks and 99.27% coverage of the entire depositors of microfinance bank, and that same proportion also applies to primary mortgage institutions, to money market other financial market operators that are covered in the insurance premium. And again, in the banking sector, they also have a coverage of 25.3% of the entire deposit base of the Nigerian banking system. So what that means that you need to have a failure of more than 25% for them to have it, be unable to meet that. So they have felt in their own wisdom, based on their accurate evaluation, that they don't need to impose additional burden on the banks to pay more insurance premium.
All right, thank you so much. Quite an incisive conversation with you on the latest development on Broad Street. Johnson Chukwu, Group CEO at Cowrie Asset Management. We thank you as always.